Hey, what's up, all of you beautiful subscribers? Welcome back to the Chapple Show, where we talk about stock market and business news. Now, we got a bunch of stuff we got to talk about today. We're going to talk about, like, Uber is being investigated by the FBI. Bitcoin took a massive dip today. We're going to talk about Target. Just a bunch of stuff. But the very first thing we have to talk about today is this big Equifax story. So if you haven't heard, okay, so Equifax is a giant credit union agency, whatever you want to call them, a giant credit company. Usually you go to them if you want to check your credit score and things along those lines. And so they have hundreds of millions of customers. Now, what happened to them recently is this happened. They had a massive data breach where 143 million customers had their data at least partially exposed to some hacker or whoever was trying to get in and steal their information, okay? So a giant hack that we haven't, I don't think that since I've been doing the show, we haven't seen a hack this big. We've seen a hack of millions of voters. We've seen a hack of a few million people from Amazon databases, but 143 million, that's a ton. That is a ton. So now here's what I want to say. Here's what I want to explain. So hackers, yeah, sure, they went in, they stole information of 143 million people. But here's the deal, is that they didn't steal 143 million credit card numbers. They didn't steal 143 million social security numbers. Actually, I think that for the large part, they just stole like first names. Some of them even stole some like IDs, which is a little bit scary. But in terms of the very, very important stuff, your social security number or your credit card numbers, there was only a few 100,000 of those stolen. So if you at all used Equifax in the past decade, or past, I guess, roughly 7 years, just make sure you go back and you check your credit cards, maybe cancel them, whatever you want to do. Just make sure you stay up to date with your financial information, that someone didn't steal your identity, that someone didn't steal your credit card information, and so on. And so there's a few points here. Based on this breach, this large-scale breach here, we believe that $300 to $325 million in gross costs for the breach would not be unreasonable. Wow. So there's actually a few lawsuits that may be happening along these lines too. But in terms of the breach itself, which could have very large temporary costs for Equifax, that's obviously going to be a problem. But two, their brand and the company as a whole is not going to be trusted. So in the long term, this is going to hurt Equifax as well. Now, who really knows what's going to happen with the company long term? I don't really know, but this is a giant hit for Equifax here. And they got to protect their information better. For a company that's so big, I mean, what's their market cap? Let's take a look at their market cap here. Equifax Stock. By the way, it dropped off a cliff today, rightfully so. Equifax down 13.66% today. They're a $17.5 billion market cap company. So before today, they were, around $20 billion market cap company. And for a company that's worth $20 billion to not have top-tier security for a site that essentially hosts the most important financial information that consumers have, that is stupid. I mean, I always say this, like, me personally, whenever I see like a database gets hacked by a bunch of hackers, and it's because, some people don't have password strength, or some people don't have database security, or their PHP script is crap. Like, I'm doing that. I can do that by myself and have decent level security. And I just learned coding a couple months ago. And so there was that story, 1 month ago, where a bunch of voters from like Chicago or something, millions of voters had their data stolen because the database that the government was using had no password. So anyone who found the URL for that database, or actually found where the database was located, they could get in and steal all that information, which is so stupid. Millions of people's personal information just stolen because people don't bother looking into security a little bit. And so actually, I'll give you guys an update. I've been trying to update my security. I actually need to upgrade my server right now. My server is the site is not live. My e-commerce marketplace site is not live currently, but I need to upgrade the server before I launch, or else I could potentially lose out on a lot of customers, a lot of money. And so I'm actually upgrading the server just so I can handle that traffic, but two, it allows me to completely customize my security, and allows me to, actually, it's kind of funny. I won't go into too much detail about this, but there's kind of three types of servers. There's more than three, but there's shared, which is basic level, then VPS, or was it VPS? Virtual private server, which is the next step up, and then dedicated server, which is what I will be using. And essentially, the higher you go up, the better your security is and the more traffic you can handle. And so a lot of these big companies, you'd be surprised, don't even have dedicated servers. A lot of big financial institutions that run their sites on WordPress, they use like VPSs sometimes, which is completely stupid. Anyways, we're gonna talk about the next part of the scandal here. So actually, yeah, so the exact numbers here, the company said 209,000 credit card numbers were obtained, which is a ton. Certain dispute documents with personal identifying information for approximately 182,000 U.S. consumers. So stuff like driver's license, potentially security numbers, and so on, could have been stolen. That's a ton, which is, I mean, it's egregious that a company can have a lack of security when over 100 million customers use them. Stupid. So the scandal is not over, okay? The scandal is not over whatsoever. So I dug a little bit deeper into this, some side stories along the scandal. So the person who runs the security group for Equifax earned $2.8 million last year, so he's going to be fired. And a lot of the security group here, they pretty much said they earned lots of money last year, and the fact that the site wasn't secured, I mean, that's I mean, saying this too, like, their site wasn't secured, they earned a lot of money, but who's saying that also, like, the hacker is not like the best hacker in the world that stole all this information? I mean, that's the other thing too. Like, this company could have had top-notch security for all I know, to be honest. I don't really know for sure, but they could have had the best hacker in the world. They could have had the freaking Jason Bourne of hackers who got into this information, and still, you should have really good security, but I don't know who to blame here. I'm blaming Equifax for sure. Because if you're a $20 billion market cap company, you can hire the best security team in the world, and obviously they didn't do their job. So yeah, some of the top executives for security got paid $2.8 million last year. But here's the part that might get Equifax in even more trouble, or a few people at least, was that several of the Equifax managers sold stock before the cyber hack was revealed, and not sold stock like a year before they even knew about it. They sold the stock like, what, days before it happened. So 3 Equifax Inc. senior executives sold shares worth almost $1.8 million in the days after the company discovered the security breach, before the public knew about it. That may have compromised information of 143 million consumers. So a few people essentially cashed out before they knew that the stock was going to crap. So let's see. Regulatory filings showed that on August 1st, Chief Financial Officer John Gamble sold shares worth almost $1 million. A few other people, $580,000, $250,000, and so on. Saying that, I guess it is a small percentage of their Equifax shares. So who knows what their intention was? Was it because they knew the breach was coming, or was it because, like, some people just need to cash out sometimes to put their money elsewhere? I don't really know. I'm guessing it's because they knew that the breach was coming here, but at the end of the day, this is just all speculation here. I didn't even know that it was that little. For comparison here, like, that little. So this guy, John Gamble, I think that he makes probably roughly $15 million a year. So when you cash out, he probably has, what, 100 million in shares in the company. I think he's the CEO or he's the CFO. Probably has, tens of millions or $100 million in shares in the company. So the fact that he didn't sell, like, he probably only sold 1% of his shares. I mean, that's actually a little bit more on the side of him. But saying that, who knows why he cashed out? I don't really know. And the fact you shouldn't, if you know of the breach and then you cash out, that's a problem. That you can actually go to jail or get a big fine for that. Now, they're going to get a fine for this. I can tell, because that's just what happens to a lot of these big people out there who, they kind of screw over the people buying the stock. They screw over the middle class person, and they just get off with a fine. They don't face any jail time whatsoever. So who knows? I don't know what the reasoning for this. He'll probably just be slapped with a fine. Same with these other people here. What do you guys think of that? Let me know in the comments down below. So I want to talk about some other different, we're going to talk about a little bit of a lighter story here. Then we're going to move on to some more business stuff, but this is kind of businessy. So we're going to talk about marriage for a second here. Marriage and prenuptial agreements. So if you don't know what a prenuptial agreement is, pretty much before you get married, you have the option of you and your spouse signing a contract saying certain things must happen or can't happen, or it's a contract that you make before going into the marriage. And largely it's for business people like CEOs or founders of companies. They say, look, I founded this company before we got married. Regardless of what happens, if we get divorced, my wife or my husband cannot take my half of the company, cannot take any of this company. This is mine. It's mine. I bought this house. That's mine too. They cannot come after it. That's usually what a prenuptial agreement is for. But it's kind of funny because there's been a few strange stipulations which I didn't know were legal, but can be done. And so there's a few things here, like in some prenuptial agreements, this lawyer was saying, like, there's been some clauses where it's they can fine their spouse $100 every time they drop an F-bomb. They can eliminate alimony payments for a woman if she gained 25 pounds from her wedding weight. Oh, think about that. Think of how does, first of all, what kind of balls do you gotta have as a husband to go up and be like, you know what? If you put on some weight, if you put on like more than 25 pounds over the next 2 decades, and we divorce, you're not getting any money. That's just how it's gonna be. You're not getting any. So don't put on any weight during the marriage, which is I mean, that's kind of crazy too. There's other things here like limiting your husband to only watching one Sunday football game with friends per month. You know, you can only go on the internet a certain amount of times or a certain amount of time per week during the marriage. And I didn't know that this was all legal, but apparently odds are these wouldn't be enforced unless something goes horribly, horribly wrong here. But what do you guys think about prenuptial agreements? Because I've said flat out all the time to, you know, essentially everyone I've dated, regardless of what happens, my partner could be a billionaire. I still want a prenuptial agreement. I don't want them to take any of my stuff. I don't want to take any of their stuff, regardless of what happens in life. They could win the lottery. I don't really care. You just keep your stuff. I keep mine. And to be honest, that's how it should be. Now, during the marriage, obviously you share a lot of stuff. But I do think that I'm one of those guys where I think finances for the most part in a marriage should be separate with a few mutual stuff, like maybe groceries, whatever, utilities can be shared payments and you know, whatever, if you don't do mortgage and stuff too. But for the most part, I think you should keep your finances separate. I don't know. That's just my opinion. I'm that kind of guy. I know a lot of very Christian people and people from the South. They're like, no, you have to share you have to share everything. The marriage is for life. Well, statistically speaking, you're going to have a 50% chance that the marriage is going to last more than 5 years, right? So what do you guys think of prenuptial agreements? I mean, it's something that it's a necessity for me. I don't know if I'm going to get married. I think I probably will. But this is the minimum. Like, if I don't have a prenup, I'm not getting married in the future. That's just, I've been open about that with everyone I've dated. That's just for me. So what do you guys think? Let me know. By the way, this title here. So this title of this article is Prenuptial Agreements Contain More Bizarre Lifestyle Clauses. And then it has the caption. There's a picture here. And then the caption is Katie Holmes appeared hand in hand with Jamie Foxx 5 years after her divorce to Tom Cruise. But the picture of the caption is actually... Who is that? It's Olivia Wilde and Chris Hemsworth, and there's no Jamie Foxx or Katie Holmes to be found, which is quite funny. So we're gonna move on to the next topic here, a little more businessy here. So there's just another Wall Street guy making a big piece of speculatory guessing here. Wall Street strategist Tom Lee sees S&P 500 falling 5%. in the next 30 days. And he's going to blame this on, and investors will be worried in part because of possible setbacks with Trump's tax reform push. By the way, Trump was saying that the tax reform should be kind of done within the next 2 months. That's when he wanted it to be done. That's when he announced it a few months ago, when he's saying it should be done by October at latest, I believe. Who knows if he changed his plans? I haven't been paying attention to it that much. But a couple of things. Investors are getting worried. There's obviously hurricanes and stuff going on. There's threat of nuclear war with North Korea. The dollar's falling. There's a bunch of reasons to be worried, and he's saying it's going to fall 5% in the next 30 days. 5% is a lot. 5% would be a pretty big correction, one of the biggest corrections we've seen in the past few years. So I don't know. I don't know if that's going to happen. I think 5% is a bit much. If it falls a few percentage points, 2-3%, I could definitely see that happening. But 5% is a lot. So maybe he'll be right. I will keep an eye on that for you guys. So let's move on to the next topic. I wanted to talk about this FBI Uber scandal here. So Uber, the ride-sharing company, allegedly, this isn't even allegedly, they were doing this. It's just whether it was illegal or not is what they're being investigated for. So Uber was using software to target rival Lyft, their drivers specifically here. And so what Uber was doing was they were using software and they were essentially getting it onto Lyft drivers' computers and smartphones, and they were trying to analyze how much work the Lyft driver was getting, and if they were getting less work than expected, maybe Uber. So if they were getting less work than expected, Uber would try to, reach out to them and say, hey, look, you can get a lot more traffic, you can make a lot more money here with Uber, sign up here, screw Lyft. They were trying to attract Lyft drivers to their company. So that's not illegal. Trying to get people from another company to come work for you, that's not illegal whatsoever. What is illegal is if they were installing this analytics software on the Lyft drivers' phones illegally, which may be the case, which is why FBI is looking into this here. So apparently from 2014 to 2016, Uber used a secret software-based effort to track how many Lyft drivers were available for new rides and where they were, citing as its sources a person involved in the program and a person who was briefed about it. So they didn't give away their source here. But pretty much, allegedly, they could have installed software on Lyft drivers' phones illegally. I don't really know if that's going to be the case. This is just a couple reports here. Who really knows what's going to happen? But if that is, that's a big lawsuit. If they were spying on if they were illegally getting into people's phones and computers without them knowing about it, that's illegal. That's illegal, and they're going to face a big suit if that were the case. Now, saying that, again, who really knows? How would they get it illegally on Lyft drivers' phones? I don't really know. Maybe they were sneaky about it, which is not illegal. If they were like, hey, download this so you can track your maybe they launched an app or something, and it was like driving analytics or something. Driving analytics, and they had to get people to register, what company they were. I don't really know how they did this, to be honest. But if that is the case, they could be facing a pretty big lawsuit. So let me know in the comments down below what you think of that. Let's move on to the next topic. Meet the 29-year-old who was just named CFO of a $100 billion giant Kraft Heinz. Yes, that is correct. A 29-year-old got the second highest position at Kraft Heinz, $100 billion company. So this guy, his name is David Knopf. He's the typical, super, whatever you want to call him, the super trendy, young, financial wizard kind of guy. He went to where'd he go for Harvard? Went to Harvard or Stanford or something. And then he went on to Goldman Sachs, and then he went on to 3G Capital, and now he's on Kraft Heinz, and now he's the CFO of this giant company. He's Forbes 30 under 30 guy. He had a big part in the Burger King Tim Hortons merger, which, by the way, their headquarters is right across the street from me, which is really funny. And so he became CEO of the parent company. So this guy is a big name in business right now. So he is from Princeton, actually, Princeton. And so he's just a young guy who's probably going to make close to $50 million next year, I'm guessing. Based on the value of the company and how much CFOs normally make. So about 20 to 50 million, I would guess. And he's going to get a bunch of shares in the company. This guy might be a billionaire by the time he retires in 20 years if he wants to retire at 50. So what do you think of hiring young CFOs too? I think it's kind of the way to go right now. But saying that, this guy looks like he's just kind of the typical business guy. He's being hired for Kraft Heinz too. So I guess, you need to be a typical business guy to work at Kraft Heinz, right? It's not like they're a new tech company or anything like that. The shares went up after this announcement, by the way, 0.5%. So, man, also one of the things too is that I don't know if I'd want to be like the CFO of a company. I want to be the founder. I want to be the CEO. I want to be the controlling shareholder. For me, like if I were a big executive with all the responsibilities that I have now, like for me, when I'm building my company, if I had all the responsibilities that I have now, what I'm doing, but I didn't have a lot of equity in the company, I mean, he's probably not going to get more than 5% of the company. I'm guessing in terms of equity. Maybe he'll get stock options. Maybe he'll get more or less. I don't really know, but we'll say 5%. Probably less, actually. No, 5%. No, he's not going to get 5% of the company. It's a $100 billion company. No. He's going to get 0.5% of the company, or even less than that. So he's not going to have too much equity in the company whatsoever. But he's going to have all the responsibilities that a typical, like founder or typical executive would have. Now, saying he's going to get compensated quite well for it, but the fact that you don't have complete control over the company, you have to report to shareholders, board of directors, I would hate that. I mean, if Kraft Heinz were to come up to me, I swear this is the case. I know it's going to sound crazy, but as an entrepreneur, this is what it's like. If Kraft Heinz were to come up to me and say, hey, we're going to offer you $20 million a year. You're going to be the CFO. You're going to have to work 17 hours a day. You're going to have little to no equity and little to no control over what you do. And yeah, that's it. Would you take it? I'm going to say hell's no. There's no way I'm going to do that. I don't want to be working for someone else, regardless of what amount of money. Maybe I'll start thinking about it if they want to give me $100 million a year. Maybe I could consider that. But it's kind of funny once you start to make some money. Like you realize that like a few $1 million, like that's not your dream life. $1 million here, $1 million there. That's not like, for me, I have to start thinking about this along the lines too. Like if someone were to come up to me, whatever, a couple of years in the future, my business goes really well, my e-commerce stuff goes really well, and say, hey, we're going to buy your company for $20 million. And we're just going to buy you out 100% and you're gone. You just take the 20 million and go live a good life. I'm saying no to that under all circumstances. I don't start a company to have it be worth a few $1 million. I start a company to have it be worth a few $1 billion. So I can live the life that I want to be a game changer. I don't want to be someone who's just living a good life. I want to be someone who leaves a legacy. And that's something that I found really important to me, especially over the past few months. Now, if you go back to my videos a year ago, I wasn't so worried about legacy. I was worried more about making money. Now it's still making money, but I've made good money now. I know what it's like. Now it's more of I want to leave a good legacy behind. I want to be a game changer. I want to have my own, Wikipedia page. I just want to be known as someone who did something really cool in the business world. That's kind of life I want to lead. So maybe you guys are along the same lines too. Anyways, we're going to move on to the next topic here. We got a few more things we would need to cover. Target slashes the prices on thousands of items. Now, a lot of these items are actually very everyday items. They're actually slashing prices on stuff like elk. They're slashing prices on everyday elk meat. No, I'm kidding. On milk, eggs, razors, bath tissues, a bunch of everyday items that people use. They're going to cut prices down. Not too much, but I couldn't get an exact number here. But the shares fell of Target by 4.7%. So this is going to lower their profits, but they have to compete with Amazon and Walmart, or else Target's going to die. So that's just the way it is. They got to cut prices, and after Whole Foods has been cutting their prices too for groceries. I mean, Target obviously sells lots of food. They need to compete with Whole Foods now, who cut their prices on 50% on some items like fruit and veggies. So all of a sudden, Target now has another big competitor in Whole Foods, not just Walmart. We're going to move on to the next topic here. Actually, we're going to close out with a few things here. We'll talk about Bitcoin for a second here, just because, I talk about them a lot. I won't go on them too much today. But Bitcoin fell about 10% today. Let's take a look, actually, at how much they fell today. 10.4% is what Bitcoin is down as of this current second. Because, here's the deal. China, I've released... I talked about this 2 or 3 days ago in one of my last videos about how China is considering banning some exchanges, some cryptocurrency. I think it was some exchanges, or I forget what the exact thing was. And now they might just consider banning cryptocurrencies, period, like shutting them all down in China. You're allowed to own them, but you're not allowed to buy or sell them in China. And so that it could be very big news. I mean, cryptocurrency is a really big thing in China right now. Apparently, it's done pretty well there. So the fact that this is actually in serious talks, I mean, think about this. I mean, China, they're becoming capitalist, but for the most, like, they're still half communist. They're still kind of getting out of that regime, that closed off regime, and they still like having control over their currencies. And I mean, I understand it. I understand why the country would want to do this. They might shut it down, and then it'll be a big black market business, and then people will go to jail for it, and that's probably what's going to happen. Will this end up happening? To be honest, out of all the countries that could shut down a cryptocurrency, I mean, China is the one that might actually do it, because, I mean, China shut down Google, right? People like Google is severely censored in China, and so there's actually Google's not the biggest search engine in China, I believe. I think it's not Baidu, is it? No, not Baidu. Maybe it is Baidu. I forget who it is, but Google's not a big search engine because they're severely censored. They're not a Chinese company, and yeah, so China might shut down cryptocurrencies. That'd be pretty big. That'd be pretty big, and it might actually severely hurt the growth of cryptocurrencies, because we know that China is they got over a billion people there, becoming capitalists. I don't know if they're the biggest economy in the world, but if they are not, they're going to be it if they keep growing at the rate that they are. So this would be big if they got banned. If cryptocurrency got banned there, that's going to hurt the growth rate by a ton. So we'll keep an eye on that over the next few weeks, few months, see what happens there. So the US dollar here, I just want to touch on this. US dollar has been absolutely crap. I've talked about this because I get paid in US dollars, but I live in Canada. And so the Canadian dollar has risen dramatically and the US dollar has gone to crap. Because of a bunch of things, like obviously, I think I've talked about that. I just talked about this, right? It's largely because of North Korea. It's because of Trump's inability to get the Congress and all that inability to pass pro-business legislation. Who knows if the tax reforms can happen? Did I mention the hurricanes and all that stuff too? So there's a bunch of things that are causing the dollar to drop. Plus the stock market's not taking off as much as it was earlier in the year. So the dollar's fallen a ton. I think my paycheck's now down 20%. Luckily, I'm still doing fine, obviously, but I mean, 20% drop. I mean, think about that. This is what it's like to be an entrepreneur and have your own business sometimes. Sometimes stuff that's way out of your control happens to you, and you have your pay cut reduced, even though you're doing still very well. And so, again, like macroeconomics is actually like killing my paycheck, 20%. So think about that if you want to get into business, especially international business or e-commerce business. Stuff like this can hurt your pay. I mean, yeah, it sucks. I remember when it started happening, I was like, oh, wait a second. It's going down to 1% every time I get paid now, 2%, 5%, 10% now, 20%. It's kind of crazy. And last thing I'll mention before we get to the stock market winners and losers is Volvo buys Luxe. So Luxe is I think it's an app. I've actually thought that this was on Shark Tank. And I don't know if it was on Shark Tank specifically here, but I think it's like an app where it's like a concierge service or a valet service for for yourself. And so I think it's like if you want your car wash done and you're at the office, someone will come by, pick up your car, take it to the car wash, come back, you pay them. You don't have to waste time doing it. Or you want to go get gas while you're at the office, someone will come by, pick up your car, go get gas for you, come back, and it's paid for, like stuff along those lines. And so Volvo bought them, and they're actually Volvo's done some cool stuff. I think that they're launching their all-electric fleet pretty soon, or in the next 2 years they're only going to sell electric cars. I think that was Volvo. And now they're getting into this like online stuff. They're getting into touchscreen smartwatches here, and now they're doing this concierge stuff. And it looks like Volvo's kind of evolving. Volvo is evolving as a company. Really, really cool to see this happening. So good job, Volvo. Now let's just talk about the stock market winners and losers here. My voice is going to crap here. Stock market winners, XL Group up 5.8%, Chubb Limited up 4.4%. Let's see, Progressive Group up 3.8%, Allstate up 3.7%. Let's take a look here at the big names here, because a lot of those are names that people don't really care about. Big winners today. I think the market was down for the most part today. Twitter up 1.3%, Snapchat up 1.25%. All right, so stock market losers, obviously Equifax down 13.7%, Kroger down 7.5%. This is closing time, by the way. It closed about an hour ago. Apache down 3.5%. Really? I didn't know that. I thought Apache was actually a Microsoft company. That's really weird. Actually, I want to take a look at Apache. I seriously thought Apache was owned by Microsoft. Maybe they are. Headquarters Houston, Texas. Oh, that's interesting. Sorry, I've just been using Apache for my servers recently, so that's actually interesting. So who else is down today? So oil looks like it was down today. Newfield Exploration down. Marathon Oil down. Chesapeake Energy down. Range Resources down. Did I mention Kroger was down 7.5%? Pretty much oil really sucked today. And let's see. Alibaba down 0.87%. Amazon down 1.3%. Tesla down 2%, Nvidia down 1.7%, Apple down 1.6%. So pretty much a bad day. Facebook down 1.3%, Netflix down 1.4%, Walmart down 1.55%. Okay, so this was a pretty fast and energetic version of the show. Make sure to check out my stock market program in the link below if you want to learn how to invest and how to set up your account, see what I've invested in the past couple months. Or set up your business. The Wealth Accelerator is really good for that too. How to set up a side business, what it takes to run a business, and so long, and kind of get your mindset right. All that's down in the link below, so you can check that all out. And for now, I'd like to thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.